Joining me today are Boris Schlossberg from BK Forex and Knippa from Kanai Capital Management. We're just going to talk a little about the yen, new updates that have been going on. This is a story we've definitely been covering a lot on informed trades, and in the Forex world in general, the yen has been a big point of discussion. So I want to talk about what's going on now and recap sort of the bigger picture views with about the yen. Boris, thanks for joining us. Boris from BKForex.com.
Great to be with you guys, as always.
And Trey, we've met before. Knippa from Kanai Capital. Trey, thanks for joining us.
You bet. Thanks for having me.
Okay, the first thing I want to talk about is the new appointment, Kuroda. Was appointed to the Japanese central bank. Here's the article from the New York Times. Boris, we'll start with you. What do you think of that in terms of impacting the market or in terms of trading? What's this mean? Does it mean anything? Does it change anything? What's the impact?
Well, first they got to get passed, right? He was appointed. The Diet has to approve them. It looks like the Japanese Parliament, which is the Diet, will definitely approve them. The real question is, once they come on board, what are they going to do? Because the market at this point has been levitating strictly on promises. And at this point, I think, having gotten so high in dollar yen, they want to see some action. It's kind of put up or shut up time out of the Bank of Japan. So if he comes out and they start to become very aggressive on QE, and remember that originally their initial plan right now is to do nothing on QE until next year. They're not even really going to ramp up expansionary monetary policy until next year. So he needs to come out really running out of the blocks. He needs to communicate to the market they're going to do ramp up QE this year. They're going to start perhaps purchasing other things than just pure Japanese government bonds, and they're going to make a very concerted effort to try to inflate the economy. This comes on even more importantly now because just a couple of minutes ago we had the Japanese inflation data, which proved to be worse than expected. They continue to be mired in deflation, and the situation now becomes even more pertinent because while you have a lot of promises, the facts on the ground still show a very deflationary environment. So I think Kuroda is going to have to prove his chops when he comes on.
But so do you think? I mean, the yen has been weakening ever since Abe, or even a little bit before Abe stepped in. Do you think that trend is going to continue, or do you think the deflation actually gives some validation to the idea of yen strength?
I think we're at a wait-and-see point right now, both fundamentally and technically. And we can talk a little bit about this later when we look at the charts. But sure. We have hit a very, very strong technical point of around 95 or 94.50. Have not been able to clear it, and did a lot of technical damage this week. There was massive liquidation on Monday, which all of us saw. The euro yen, which is obviously a derivative of dollar yen, dropped 600 points. We haven't seen that in like 3 years. Whenever you have these kind of very, very sharp collapses, they take a long time to work off. In other words, it's not going to bounce right back up and go on a stratospheric rally higher. All the news about Japanese changing their posture towards monetary policy is pretty much already put into the market. Now it's going to have to be action that's going to move dollar yen higher.
Okay. Switching over to Trey, what do you think about Kuroda? Do you think we still have room to go here? Boris was saying that we're at an inflection point, might need some consolidation for the next leg down in the yen. What are your thoughts on sort of this appointment and how it might impact the yen and the JGB market?
Well, if you look at the price action back on Monday, Boris was dead on about when you had all those people unwinding euro yen. You had the Italian elections, people started dumping the euro, they bought the yen. There was the yen all of a sudden. By the way, lately the price action the last several days after Monday, all of a sudden the yen has taken on this sort of risk-on, risk-off kind of action. The S&P breaks, the yen firms up, which is not uncommon as I've started trading the yen. We've seen it, but right now it's just going into risk-on, risk-off kind of mode, not necessarily what's going on in Japan. Now, Boris's point that he made about, all right, it's put up or shut up, I agree with him that the market has turned and gone sideways. We had that really, really violent move in the yen to the upside, but you notice how it gave it away the same day. You rallied the yen dollar, you rallied the yen versus the dollar, and managed to turn around and close and give away a really big move by the close of the session. So in my mind, you know, yes, you had a little bit of firmness, and then it gave it away immediately. Does it mean that we're going to have another leg down? Eventually, I think we will, simply because of the three BOJ governors that were kind of the ones being talked about, he's picked the most dovish of all three. And this guy has been very vocal that something extraordinary has got to happen, and that the BOJ has been negligent in their responsibilities. So it's my feeling that this guy gets through the diet, he will come out shooting. And by the way, Japanese government bonds have been rallying. They're rallying right now yet again. They seem to go up every single night. So, you know, presumably they're going to extend maturities out on their purchases, et cetera, et cetera.
You mentioned JGBs were rallying, you know, this week, and with this news, the yen rallied or a little bit, or at least maybe not stabilized in a way. You know, you're heavily involved in the JGB market with your fund. When it rallies like this, are you taking any action, or you just have those options that you're just sort of sitting on, rolling over?
My strategy is pretty simple. I don't want to be short futures, because I know that the Bank of Japan is how exactly are they going to weaken the yen? They're going to do it by making asset purchases. They're going to be buying their bond market. So I don't want to be short. That's why I don't like the JGBD. A lot of my clients call me, oh, maybe we need to triple short ETN, things like that. I don't want to be short the Japanese government bond market. I want to be short if it breaks. And the answer to that is options. Phase one of my strategy, and let's also clarify something. I'm not a fund. I don't pool client money together. I'm registered as a CTA, so these are individually managed accounts. So the individual managed accounts, phase one of the strategy is I'm buying options that are about 50 basis points above on yield. Obviously, I'm buying puts on the bond market, but my options are about 50 basis points out of the money. And I'll keep ratcheting those up every month to 2 months as the market works a little higher. And at some point, bond markets, currency markets, and banking systems all need one thing, and that one thing is confidence. When is confidence going to get shaken? I haven't the foggiest notion. But phase one is I'll keep ratcheting my puts. I'll keep chewing through option premium month after month. But then a 50 basis point move is not a big deal. Do I expect something to happen as we've just seen in Argentina? I don't know if you guys saw the news about credit default swaps in Argentina just exploding on the idea that they're not going to make do. But I think that those days are coming in Japan at some point. But we're just a ways away from that. So it's my job as a fiduciary to try to limit my losses until we get our first move.
Boris, you know, Trey, and there's an interview with Trey we have on Informed Trades where we went into much more deeper into the subject of whether Japan's really going to, you know, we're going to have significant currency crisis basically in Japan, where dollar yen and all the other pairs against the yen will go up. You know, I'm sure you've heard the arguments of their debt GDP ratio, the demographics. Now they're running dual trade deficits or trade and budget deficits. What do you think? Do you think, are you really that bearish on the yen? I know you have maybe a little bit more of a short-term trader perspective, but how's your overall perspective on the yen? What do you think of it?
Well, first of all, I'm going to qualify by saying I am not qualified to make long-term bets because I operate in a 24-hour, 48-hour arena. So, you know, for example, when you asked me about the yen, and Trey was talking, I was going to ask him, it feels to me like yen was a buy on dips trade for the first 6 weeks of this year for sure, and certainly, you know, even from last year. Now it feels to me like it's a sell on rallies trade until we clear 95 at least. And that's how my mind operates basically on very, very small news cycle chunks, because that's really where I operate. Having said this, though, the long-term JGB short trade has been known as the Widowmaker, because that trade sounds really good, but has been brutal for anybody who's stayed long-term. And I guess if you're going to short the JGBs, you do it in the way the trade is doing it, with a very, very limited risk profile, where if it does move, it moves. 50 basis points is not a large move, but it's a massive delta move in the JGBs. I mean, JGBs are what, like at around 87? I don't even know what the yield is at this point.
0.75.
0.75. So a 50 basis point move is a massive delta move in the bonds, and it would clearly, I think, create a pretty significant financial crisis within Japan, because everything in Japan right now is based on a notion that you have very, very low roll. If roll the whole point is, if interest rates go up 1% in Japan, the cost of servicing that debt becomes massive. It's like twice as much as it was before. So the roll becomes a very, very critical factor. Having said this, though, I mean, Japan's still a net capital, has the largest amount of capital on board. A very, very, very wealthy country, but there are definitely very troubling signs, especially the conflict with China. The one thing I will say is kind of interesting, though, is from a political point of view, when you look at currencies, one of the things you'll notice is that the U.S. has not been a critic of the Abe administration at all, because U.S. actually wants Abe to succeed in the greatest possible way, because U.S. needs Japan to be a complete protectorate in Asia against the Chinese encroachment, both militarily and politically. So it is very much against U.S. political interest to see any kind of a weakening economic structure in Japan, and we'll be probably the first ones to come to rescue them if there's any sort of a problem. So you are seeing, everybody else, Europeans, of course, the Germans hate the fact, because Germans have been basically rioting for free for the last 4 years. The reason Germany has been doing so well is because they've been out-competing. Germans basically compete against Japanese in the primary capital goods market across the world, and it's been very easy for them because euro-yen has come down so much. They've been able to outsell the Japanese everywhere. Now, all of a sudden, the Japanese are going to become even with them on a currency basis in other markets aside from Asia, and it's going to help them. So you have this very, very competing spheres of interest in the currency market, where the Europeans hate the idea the yen is weakening. The Americans actually have no problems with it whatsoever and want to see it weaken so Japan can strengthen and can act as a political, basically a political protectorate against Chinese encroachment. So I think there's a lot of interesting things that are going on aside from the pure economics of it. But on a longer-term basis, definitely, it's going to crack. It's just a question of when. Very, very hard to see how it won't, given the amount of debt they have. And really, the game is very much a game of keeping rate. Ironically enough, they want to have a weak currency, but they also need to have very, very low interest rates. They cannot have one or the other go the other way, because it's going to be very damaging for them economically.
Sure. And that's something we or Trey had talked about, in terms of, the bond market and the currency market. It's sort of they feed each other potentially in terms of one weakness could lead to the other. And Reinhard Rogoff studies have gotten a lot of attention in the currency world, have also highlighted this. Trey, in terms of, news stories, or, there's obviously a lot coming out with Japan. There was a report I saw the other day about agriculture, food costs rising in Japan. Now we have these new BOJ appointments. Are there any particular news stories that you're focusing on, or, since you're heavily involved in, the Japanese market, is there anything particular you're looking for? The conflict with China, what's really sort of a focus area in terms of all this news out there? What are you focusing on? What do you recommend other traders focus on?
I wrote an article for Seeking Alpha a few months ago that, do you know what probably is the biggest threat to the Japanese and to their trade balance? Because we just talked about their trade balance moving from a surplus to a deficit, and what would accelerate that? Well, never mind the fact that weakening your yen increases the cost of your imports, so that hurts your trade balance right there. But you know what hurts the Japanese problem more than anything is any major disruption in energy prices. So if you had crude rally to 150, I mean, clearly I'm kind of stringing these conclusions together, but what are some things that could really cost the Japanese, and what could cause their bond crisis? What could cause that crisis of confidence? And one of those is because they do not have a supply of energy domestically. If energy prices spike up, that hurts them. That hurts their current account surplus. Well, now it's a current account deficit. It accelerates that. So you're going to have to watch energy prices. What Boris just mentioned in the relation to the Chinese, he's dead on in the idea that the U.S. is kind of giving cover to the Japanese. You don't see U.S. policymakers being super critical of the Japanese going on this devaluation tear, because I do think that we are supportive of the Japanese being a strong force over in Asia, also looking as North Korea continues to to continue to make noise over there. We need a strong ally in the region. But isn't this odd that Shinzo Abe, he's got it convinced in his head that this is simple. I've got a massive amount of debt. I'm going to devalue the currency. When I devalue the currency, exports pick up. Never mind that the exports is only 10% of their GDP, but exports pick up. When exports pick up, GDP numbers pick up. GDP numbers pick up. Tax revenues increase, and we use the tax revenues to pay down the debt. Yeah, it's just that simple, right? So let me get this straight. He wants to devalue the yen to increase exports, and then he goes and picks a fight with his largest export partner, which is China. This makes absolutely no sense. If the idea is to ship more product out, then make friends with the people you ship product to.
Yeah, but Trey, the problem is that it does make sense if you understand what the fight is all about, which is exactly what you're talking about, which is energy. I mean,
Sure.
The fight is not about those little rinky-dink pieces of rock in the ocean. It's what's underneath the ocean. There is a lot of speculation. There's I don't know how many billions of gallons of potential crude is underneath that particular spot, which is why, I mean, honestly, this is the only reason why you have military ships coming in there all the time. They couldn't care less if this was just simply a piece of rock. It's the energy underneath it that is the fight. That's what the fight is all about, and it has not gone away. I'm sure you've seen the headlines where the Chinese have been doing pass-bys every other day through that area, and what's very ironic and what's interesting is that you have this kind of a frenemy relationship where they have to have trading relationships between the two of them, but at the same time they're gearing up for a very serious military confrontation. And history tells us, that never kind of works out well. People just rarely walk away from the brink, of conflict. It tends to escalate, and politics always trumps economics when it comes to this kind of stuff, especially with a guy like Abe, who's a pretty big nationalist, and whose father and grandfather was a big nationalist. And they're always going to, I think, gamble on the idea of strength, militarily rather than economic advantage in the long term.
You just touched on it briefly there. I think that the story with the islands in the East China Sea, I actually think that it has more to do with that nationalism. It has more to do with we have to band together as Japanese. And guess what? It gives them an excuse to spend more money on defense. He goes and spends more money on defense. There was another guy who did that. His name was Ronald Reagan.
Right.
So now he goes out, he increases fiscal. That is one way to do fiscal stimulus, is go spend money on defense projects and expand the military and that sort of thing. In the meantime, you get to wave the Japanese flag and I'm for I'm for Japan here in kind of creating and answering this tension with the Chinese. So yes, I think I understand where you're going with the energy thing, but I think that the nationalism story and the reason to go to borrow more and spend more is a big reason why they're letting this happen. I've got friends in China who talk about the Toyota and the Nissan car dealerships actually have fences around them to protect them from theft and to protect them from things like that. So there's no love lost between the Chinese and Japanese.
There's a lot of anecdotal evidence. My wife is a hedge fund manager, and one of her, she follows consumer retail. So Crocs is a story that she follows. Now Crocs has a big retail presence in Japan. The shoes, the little Crocs shoes, but they're manufactured out of China. And one of the problems that they're having right now is this. Everybody in Japan should be buying Crocs because it's a very useful product for the population. They're refusing to buy because of Chinese it's manufactured in China. There is clearly very ugly national tensions going on there in Asia. That's not helpful, and and that is actually not yen negative. That is yen positive. If we get a situation where we have serious risk aversion flows, I think yen strengthens rather than weakens as we go forward. At least for the near term.
Just want to wrap this up pretty quickly. Before we do, one thing I definitely want to touch on, especially to get a shorter-term look, is charts. So right here, let me just pull up the dollar-yen chart. Okay, here we had a huge, reversal. This is February 24th. We've recovering a little bit, but this is definitely, a big move, a big candle that sticks out, going back to when dollar-yen started its rally. And Boris, you mentioned that a little bit. What do you think technically, in terms of the near-term outlook, how significant is that candle? What could traders look for to expect or position themselves with?
Well, it's pretty simple. Let's see if I can share my screen with you, and let's see if I can show you what I think is going on here. Are you guys able to see my dollar yen screen? Yes. So
yes.
If you look at this technically, technicals have been communicating yen resistance for really almost the full month. Basically, when you look at dollar yen, this 94 level, 94.50, has been tremendously strong resistance. 93.50, 94.50 is pretty much the quarter. But you see it pierced into 94, came back down. Pierced again, 94 came back down. Pierced again, could not break it. We had a gap opening on Sunday, which broke above 94.50, got everybody excited. And then this was technically a horribly negative construct. Before 8 o'clock Tokyo time, the open of Japanese markets, we gave it all back and closed the candle on the lows. This was a very significant tell that there was tremendous amount of supply above 94.50. There was a lot of sellers above there. And then, of course, we had tremendous amount of technical destruction. Now, having come down, and you're looking at the chart right now on a short-term basis, the only thing that gives you solace if you're a bull is that we've tested 91 level 2 or 3 times and bought it back quite a lot. This whole area has become pretty much a value proposition area. Every time we've been dipping here, there's been a lot of value buyers, possibly late longs, or people who want to establish positions that haven't had a chance to do so are definitely buying here. This area gets broken. We break 91s. That is a very negative technical construct. They would tell you that the yen could basically unwind and break a lot of hearts and maybe go all the way back down to the 88s, maybe even 85s. For me, a buy signal in dollar yen, a true buy signal, does not occur until and unless we literally hit 95. Right now, we're just basically working off this very negative break, and every rally feels to me like it's a sell rather than a buy. You could buy some short-term trades here, but you're coming up against 93s, which has been a big resistance level, 93.50s. All this positive news that hits the market about dovish central bankers and everything else not having an impact. A key trade that everybody always loves to trade. And by the way, trade was talking about the idea that how fast it came down. The statement in the currency market, the futures market is, they go up by a staircase and they drop down by an elevator, which is a very, very common thing. Liquidation can happen instantaneously. But once liquidation happens, the damage is done, and basically it becomes very, very tough to clear a lot of these levels. So I think, it's pretty much a sell the rally story rather than a buy the dips until you get down to the support level. And then we get a true test. Are buyers really going to hold this level? Then you may have a recurrence. But what I was going to finish up with is, when you have positive news, so you have all this positive news coming out and negative price action, you always want to trust the price action. If the market is not confirming the news, then the market is telling you it doesn't care about the news and it cares about other principles, and you should follow what the market is doing.
Okay. Trey, in terms of the longer-term outlook, Boris gave us a technical breakdown and a case for the yen sort of strengthening, a lot of liquidation. If that happens, how do you react to this? Is that just something where, as a longer-term perspective, you just have to manage the psychology and manage the volatility? Also related to that, something we talked about in our previous call was the idea that what to trade the yen against. So we talked about the dollar, but also this past week, gold, which we discussed, has been getting hit pretty strongly. So what are you thinking about all this volatility, potential pullback? Is there anything else that you like trading gold against, or excuse me, the yen against?
Well, first of all, clearly this discussion has to feed into what's your time horizon. And what I'm getting from a lot of my clients who are in my CTA with the bonds, I've talked time and again how I do think that the yen will move first. Because the Bank of Japan, if you ever got any weakness at all in bonds, Bank of Japan would print and go into hyperdrive to support that market. That is when you move from an orderly devaluation to a disorderly devaluation. That's when you get something ridiculous like 250 yen to the dollar or 300 or something like that, is when get some pressure on bonds. Bank of Japan steps in to try to hold it up. They print massive amounts, and that's when you get, like I said, that disorderly break. But let's also try to put something in perspective here. The yen, if one more of my clients calls up and say, man, I'm just dying for a pullback to sell the yen, or a bounce, depending on how you look at it. I'm trading the futures, so we trade the inverse. So I'm dying for the futures to bounce a little so I can sell the yen. Let's put this in perspective. The yen has barely moved versus the dollar here. It looks really gnarly on a chart. It looks like it's had this huge break, which it has. But in the middle of 2007, yen to dollar was at 120. The fact that we just moved from 77 to 93, that seems like a lot, but I think that there's a long, long ways to go. And option volatility is not that high. Even though you just moved, in the futures, you've moved from 70, or sorry, what would that be? It'd be from 130 to 108. I mean, that's a 20-handle move in futures. You can go and you can buy the at-the-money puts all the way out to in December, and the implied volatilities are still 11.5%. That's not that high. That's not an extremely high implied volatility. So I think the options, and now that you've got this basing going on and this kind of sideways back and forth, now some of that vol has actually been sucked out, and vol spiked to like 12.5, and it's pulled back a little bit. So I like the idea of just going out as far as I can, buying some out of the money puts and waiting, because truthfully, I think the yen probably precedes my trade, because bond weakness will be met with Bank of Japan, and that's what creates the disorderly devaluation of the yen.
Okay, it's been great talking with you guys. Just before we wrap things up, I want to let you guys talk a little bit about more how people can find you on the web and what you offer. Boris, if people want to follow you, what's the best way to do that?
The best way to do that is to go to bkforex.com and simply look around the website. Feel free if you want to join us. We run a forex advisory service. We basically trade ourselves every one of our signals, and we trade on a shorter term time basis, around 24 to 48 hours in terms of our trades. We're pretty much straight by the arrow prop traders. Three yards in a cloud of dust. Try to take positions in all the major currency pairs based upon technicals, fundamentals, and sentiment, and a lot of our proprietary work. And I've been doing it for about 4.5 years. We have one of the longest and most successful currency signal services in the world. So I welcome everybody to come and join us. We also do a lot of trader education, and there's plenty of free content on the website as well. And for those of you who want to just follow me on a day-to-day basis, I'm very active on Twitter, and you can follow me at FXFlow. FXFlow is my handle. Just simply sign on, and you can always tweet at me. I'll be happy to answer any of your questions.
Sounds great. Also, for those viewing this on YouTube, Google+, Informed Trades, there will be links beneath this video. So feel free, if you missed the words, just click on the links beneath it. That'll take you to where Boris is on the web. Trey, tell us, where you are and where people can find you.
Absolutely. My website is shortjapandebt.com. And if you go to Short Japan Debt, there's a place on there to sign up if you'd like to learn more information about how I'm taking my positions in the Japanese government bond market, what my timing is. I've got 2 phases to my program. I'm happy to explain that. If you go to Short Japan Debt, register on there. Also, I will send out, if there's an announcement. I was pretty busy this weekend as you got BOJ governor discussion going on, so I will send out regular updates. Plus, the number of articles that's coming out now about Japan, the story is really starting to get some coverage. So about once a week, I'll put together 5 or 6 of the most important articles that I saw that I enjoyed reading, and I'll email that out in a newsletter form so that readers can stay up to date. Also have a Facebook page, Short Japan Debt. You can like that. If you like the Short Japan Debt Facebook page, I will oftentimes put articles on there as well. If I happen to have been on TV, I was on Bloomberg this morning, I'll upload that picture on Facebook and people can watch it there. And then on Twitter, I'm CME Trader, CME, like Chicago Mercantile Exchange. My day job is I sit on the floor of the Merc, and so when I'm tweeting, I trade my CTA is a long-term position in the Japanese government bonds, but my day-to-day activities, I'm from Texas, I trade crude oil and cattle. What else would I trade, right? So I'm constantly watching those two markets, and I tweet about them quite a lot.
That's great. Thanks a lot, guys, for taking some time out to join us. Definitely, I'd love to have another discussion about this as the Japanese situation unfolds. Again, for those watching this, visit Boris and Trey at their websites. You can find the links beneath this. And thanks a lot for joining us.
Thanks, Simon. Thanks, Trey.
You bet.
Take care.